In this video, guys, we're going to discuss that some studies show that chart patterns are no longer working. What does it mean for traders? Stay tuned. Hey guys, warm welcome to some studies, some recent studies, well I say recent like in the last year or so recent enough for our purposes, have basically said that chart patterns are no longer working. So what does that mean for us and what do we need to do about it, if anything? So these studies were saying, taking the traditional chart patterns that everyone knows, all the way from kind of flags to head and shoulders to double bottoms, double tops, to pennants, to wedges, all this kind of stuff, and saying, listen, if you take them in the textbook way, then these aren't working as effectively as they were perhaps 50 years ago, 20 years ago, whatever it was. And so they say that these are just ineffective and you shouldn't use them. Now, to me, this is no surprise at all, because if you go back and you read any books from the 1930s onwards, you can see that it was very obvious a much more trending environment. People were making an awful lot of money riding the trends. The pullbacks weren't so aggressive. It seemed to be a bit easier. Now, I'm very, very cautiously saying that because I don't want to be the guy who says, well, it was super easy back then. I'm sure everyone had their challenges and it wasn't super easy at all. But there's a possibility that because we've now got a lot more algos, a lot more machines driving price, that yes, because the instantaneous orders, it's much more kind of jagged and noisy. So potentially those cleaner trends that were making those guys a lot much more money when they could get on the end of them aren't here so much anymore. Now, of course, someone might go, well, just look at this so-and-so trend, this trend. Yes, I get it. There are plenty of trends out there, but perhaps things are slightly different, and I expect them to be. Dynamics of market changes, participants change. People can switch instantly from being long treasuries to being long stock, or long stock to being long gold, etc. instantly, depending on how obviously the liquidity they've got, but that kind of thing. Years ago, it would take time to unwind it, so it'd be a much more critical decision to make. All right, so that being said, so what do we do about this, if anything? So there's a couple of ways of looking at this, guys. Number one is, as I say, it's no surprise at all. I think that if people are looking and testing chart patterns and the definitive method that they are presented, i.e., you know, a head and shoulders, this is a traditional head and shoulders. There you go, guys. You go short on the neckline, you extrapolate that out there, and then there's your target, whatever it may be, however it's tested, that's it. And every time you see that, you take it. Now, I don't know about you, but I learned pretty early on, the hard way I might add, that doing this every time you see that pattern will result in you losing money. It's just the way it is, because very often price would come down a bit and it would be a nothing. It wouldn't go to the level you wanted. Loads of things. Same with buying a traditional flag. You get the flag, you'd buy the break of the flag, and it would go and then it would just fizzle out. And you'd say, well, why is this not working? Same with some indicators. I talked about indicators before, the stochastics. That was kind of my first foray into things. Got absolutely nailed and thought, well, this is useless. The point is, guys, is that this doesn't surprise me, because perhaps when you did this, when things were a little bit slower, a little bit cleaner potentially, then they would have worked in the traditional sense. And this is where they came from, right? They came from that kind of era, and now we've got them now in the current environment. But the difference now is we've got to take the prior action far more context. We've got to take these when they're in the right position. We've got to look at these in the bigger picture. And yes, if you're a subscriber, appreciate your support, by the way, you'll know I talk about this a lot. But I think it's so important, because you've got guys who are probably far cleverer than me, who are doing lots of analysis on stuff and back testing and coming up with theses that we know is already there. If you take every single head and shoulders, you're going to get screwed. Sorry, that's just the way it is. They don't work on their own. You need to use this, what it's telling you, i.e., you know, buyers are in control, now sellers, and on what the story behind it, and then put that into some sort of other context where you've got some weight behind the reason to take it. So that's the first thing, guys. The second thing is that just because they fail, okay, so let's say they're testing traditional head and shoulders, traditional flag, traditional double bottom, double top, etc., and they're not working, well, are you then saying that taking a fake of one of these will work very well. So one of the things we might say is, okay, well, is it a fake out of a range? Is it a false breakout? Is it a pin bar? Some of those other type of things that are now coming into play a lot more in terms of trapping people, in terms of fading these moves. Now, they are becoming more profitable. And I started to work this out within my first 5 or 6 years of trading that, hey, these aren't really the key. Yes, they work in the right times. And if you get them in the right environment, they're super powerful, especially kind of this one of my favorites. But other times when the crowd is getting involved in all this stuff, there's quite a lot of money to be made from a day trading perspective, especially fading those initial people who are jumping on, because people know everyone's jumping on, supply demand shifts a little bit, and then you get little fake out spikes up, makes that look a bit grubby, and then might go. So the actual price action of the left shoulder, the head, the right shoulder, etc., is still valid, but then it's all a bit dirty and grubby afterwards. So it takes out all the textbook traders, but that's actually quite a nice opportunity for day traders who, oh, shock horror, are buying into this drive here, which is, oh no, you shouldn't be doing that, and they're actually making good money out of it. And that's some of the things that work very, very nicely from a day trading perspective, is fading the crowd favorites. It spikes back up, nips back up here, stops them all out because they're getting short. It stops them all out. You get a nice chunk on the long side, couple of days worth of thing. It's done, it's gone. And then you can look to reshort it as it starts to come back into the lows, and then it becomes a genuine head and shoulders. But this little bit of noise has tricked out everybody and has made it appear like it's not working. So the summary is, guys, one, make sure we're putting these things into context. Number two is use it to our advantage. Use the fact that these textbook stuff doesn't work as well if you're back testing them all exclusively, and say, well, how can I leverage on them because of that? What else do I need to add to it to make it work for me? Do I need to do this? Do I need to do that? There's still opportunity out there, and some people take this as a negative thing. I take it as a good thing, because I want the market to continually evolve, because I want to be able to stay one step ahead of everybody else in the market. Us guys who are all watching this and all the subscribers to the channel, we want to be one step ahead of all the crowd who's doing old stuff that's not working anymore and getting frustrated. We want to be thinking about new strategies. We want to be taking opportunity while it's there, and then when it's gone, let those guys then carry on doing that, and we move on and we keep one step ahead. So it's good news, really. I think that we should look at it as good news and say, well, you know what, if everyone else is doing that thing, that's fine. It's just flowing money into the market and giving us an extra opportunity to trade better. All right, guys, take care. I'll see you in the next one. Bye-bye.